Hello friends, welcome to my channel and thanks for watching this video. So friends, we have ended with one more positive week, and the last day of the week was indeed very good because it was Friday the 13th. But instead of that, what we have seen is a positive close across the indices, and apart from that you can clearly see some positive developments or developments which will definitely have an impact in the short term as far as Wall Street is concerned. So there are lots of things to cover, and this is the second video or second week for CY 2023. So things are now getting charged up because market participants are coming back after the winter holiday, and things are about to move higher. I mean, in terms of developments, as far as the stock market, obviously I am doing daily, weekly videos so you can get the idea about the price movements. So let's start with this important development that we have seen in the market and the news which are definitely going to impact the market. So let us just analyze what has happened in the last 1 week and what will probably happen going forward. So let us just start another session of USA Weekly Market Report. But before that, if you haven't yet subscribed my channel yet, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Now, I mean, it was mildly positive. You cannot call a very big positive as far as all the major indices is concerned. Now let's start analyzing the news first. US will hit its debt limit Thursday. I mean, this has happened in the past. It will create short term volatility. That's it. Because at the end of the day, everybody knows if they do not increase the debt limit, obviously it will create a negative impact on the government. Forget about the stock market. It will create a negative impact on the government. And for the government to run properly, they must do that. Now, this is going to be an interesting scenario because after 2022 midterm elections, things are getting a bit changed. But at the end of the day, it's about the government, so both Republicans and Democrats both support the bill. That's a big probability, or the positive side. But if there is anything which is there which we don't know, obviously it will create a volatility as far as the short term price movement are concerned. That we will discuss later on in this video. Apart from that, I mean, this cryptocurrency thing is getting messier. We don't know where will it end, but the thing is, right now there is no positive scenario because there will be latest developments which are coming on regular basis. So if you don't know how to deal with that, please stay out of it. Don't try to be over smart. Otherwise, you will be in a deep trouble. Okay, if you are thinking that you will see short term price movement as far as the cryptos are concerned, we know how fast the price movements are. If you are a good trader, then you do whatever you want to because you are a pro. But if you don't know how to manage your risk, please stay out of it. Okay, that's the most important thing over here. Apart from that, let us see what lies ahead because yeah, the Davos elite like to make bold prediction. Let us see what comes out from the Davos. It does not matter at the end of the day, but because it's the premium group, obviously it does have an impact as far as the, if there is some major developments from the company, and because there are lots of geopolitical things which also comes out from there. So in that context, there will be some important developments which are yet to be seen from the Davos this year. UK economy ekes out growth in November surprise, but recession is still seen as inevitable. Obviously, I have talked about how bond market is indeed behaving and what the yield curve is saying in the last couple of months, and it is very much clear because you cannot control each and every part of the market, and bond yield is the bond market is the largest market. So obviously what the bond market is suggesting is the near term uncertainty is much higher or way higher than the long term uncertainty. So you must be a bit, or I would say more aware about the recession. I'm not talking about the stock market price movement, okay? Just be very clear. I'm talking about the economic recession and not talking about the stock market recession, because both are extremely different. So do not try to jinx it up. So because both things are completely different from each other. JP Morgan tops estimate for the fourth quarter but says mild recession is now central case. I mean, there are two views. Most of the participants are saying recession. There are few who are saying, when everybody is saying recession, obviously we don't know whether that will be a scenario or not, because there is also a chance of soft landing. I don't want to go into that. We will see how the number comes out and then we will decide things accordingly. I mean, just try to be on the safer side. If you are not an economist and that is not your job, and if you are just a stock market guy, there is no point talking about how mild or how brutal the recession could probably be. There is no need talking about all those crap. So, apart from that, let us see what lies ahead. Yeah, this is a pro news, but headline is important. International ETFs are surging to start 2023, but investors should brace for volatility. Yes, indeed, there will be volatility because there is no visibility as far as the yields are concerned, because when trends are shifting, let's say for example, now the trends for the last 1.5 year has been on the upside. If you're looking at the yields, now it is moving down. So the transition period in between the up and down will definitely cause lots and lots of volatility into the stock market, and that's something we will definitely see as far as the overall trend is concerned. So please be aware about that. And if you want to be in the stock market, or if you planning to invest in X, Y, or Z shares or stocks, then hold it for the least of 2 to 3 years. Do not think that I'm going to buy it and in the next couple of months I'm going to sell it, until and unless you are a short-term trader and you know how to manage your positions. I think this is something which one must read. I'm just opening it for you. I'm not going to read it out. So, four troubling global trade trends flashing consumer weakness for a market already fearing recession. I mean, yes, this is what I'm talking about, and this is going to impact the economy not only for the US, but in for Europe, and there are lots of many countries which will face recession. Okay, and I'm talking about economic recession because there are indications, there are highlights, and there are signals which will, and which is indeed, or which are indeed saying that there is definitely be a recession, and the recession has already been started. But I'm not at all talking about the stock market. Okay, stock market is not at all related to what is happening right now. It has already factored in, or if it does not, then most of the things are already gone. Okay, so you have missed the trend. So this is what we have here. So let's start analyzing the trends, which is our prima facie focus. So as we can see, in the last Friday, 0.33% up for Dow Jones, 78 points up for Nasdaq, or 0.7%, then 15 points for S&P 500, and it is very close to 4,000 points. Gold at 1923. I've been saying this thing since 1670, 1650, 1670, 1700, and now you can clearly see a $250 rise for gold. I mean, this is a very good trade if somebody has taken it in the last 2.5 months. The oil is trading in between 70 to 80. That's fine. There is no need talking about the oil, and it is moving $1 up, $1 down. If it trading in between a range, it's fine. US 10-year yield is not at all near 3.45. It is now trading at 3.45 or 3.49 rather, but this is not the issue. I will explain these things later on. Yeah, the good thing is VIX fallen below 20. I mean, 20 is the benchmark. If it continues above 20 it would be a problem, but if it continues to trade, or if it trades below 20, or it falls down, then obviously it's a good indication for the market because volatility is now coming down. Yeah. The most important thing is natural gas. I'm going to talk about natural gas because natural gas closed way below $5. I was, I mean, in my previous videos, I talked about $5.5, but now it closed at 3.48. So this is way lower than what I have said. So obviously, it seems like the upside is already been over. Also, yeah, what I was talking about is not the US 10-year yield, but what is happening in the short term. The US 1 month yield is 4.43%. So, I mean, why should I or why should anybody take a risky bet who is putting millions and billions of dollars, because the risk-free rate that you are getting for a month is 4.44%. So you are getting a risk-free money of nearly 4.4 or 4.6. As you can see, the 6 month yield is 4.8%. So if you are investing $1 billion, you know, then you will definitely get a good amount of money, a risk-free rate, within a period of 6 months. So this is something which we need to look at, because the shorter term yield is way higher than the long term yield, and that's what this is a clear cut indication that economic recession is on its way or has already been started. Whether it will be a soft one or hard one, that is, I'm nobody to discuss about that. And most importantly, we will discuss about the US dollar index, because the dollar index is now in a bear grip. The dollar index is now in a bear grip, and if you still think that the dollar index will now move higher and it is still in a bull trend, I mean, I would tell you one thing very seriously: please be very aware and please be very much cautious about this. If you are thinking that dollar index is going to perform on the upside, because things have changed and changed very quickly. Because if there is a recession, dollar is not going to sustain. Okay, because interest rate is moving higher, the correlation has broken. Interest rate is moving higher, dollar is moving higher, so that correlation is clearly broken. And now the transition phase is going on, where even because generally we have seen when the dollar index moving lower, stock market must rise higher, but there is no such direct correlation right now because the transition phase is going on. And once we know that let the inflation rate comes down, once that happen, then you will see the actual rise in the stock market. So the thing is, there are recessionary views, there are stock market views. Don't try to mix it up. That's what the important thing to understand over here. So let's start analyzing the charts and let's look the most important one. Or I will start with natural gas futures, okay? Because this is something which I have been tracking for the last 2 years, and as one of them who talked about $4.5, I've talked about $9. So this is something which I have been talking, and this is very surprising for me because for the last month and a half, I'm not very much focused on commodities, more specifically on natural gas, because I know that the major trend is over now, because things have not reacted the way it should be. I mean, the way the concern was, and then we have seen a I would say, because I was not noticing. So the thing is, this big fall is surprise for me. Okay, I know that this is going to happen, but the kind of brutal fall we have seen in the last 2 months was is completely broken the trend. So what do we have here? Primarily, this is the range which you can see as far as the trend is concerned. So because it has already tested the upper end of the range, it has tested $10 and it has tested $6.5, and now it is falling down. So the next 2 or 3 support will be as follows. It will start with 2.43, then we're gonna have our next support of 1.93, and we're gonna have the big support or rather stop loss at $1.6. So this is something which we're gonna look at as far as natural gas price is concerned, natural gas futures is concerned. So it is a big crackdown that has happened, and you will see much lower prices going forward. Okay, now talking about the dollar index. Okay, this is very important to understand what's happening, and let me show you the, I think, yeah, the weekly chart, rather talking about the, so this is the weekly chart for dollar index, and you can clearly see this was your range. And right now we can say that this is your range. So what do we have here? uh, Dollar index has been trading in between 88 and 89 on the downside and 100 to 104 on the upside since 2015. And then what we have seen a big breakout in 2022 June. It went up to 113 or 115, and then a sharp fall. And now, because dollar index is trading below 103, it is this specific move or highlighted section will be considered as a false breakout. And now you have this highlighted section as your active range, which simply means now dollar index, if it continues to trade below 103, will definitely move towards 89 and 88 in the upcoming months and years. Last time, as you can see how much time it has taken, last time the move has taken 427 days. It means 1 year and couple of months, and 294 or 300, this one, yeah, 448 days. So in between 420 and 450. Okay, so you can say uh, 1 year and 4 month or 1.5 year kind of trend we have. But this fall, if it persists, then obviously it's going to change the trend, because it's going to be a multi-year fall that has just started. So you must be very very aware about the trend. And if you think that you want to go long as far as dollar index because it has fallen a lot, please be very much aware about the trend and use 103 and 104 as your resistance on the upside. If it trades above 104, then obviously the trend may reverse, but the kind of fall we have seen in the last couple of weeks or months, it's quite brutal. Apart from that, let's talk about Nasdaq. Let's talk about Nasdaq, and this time I'm not going to talk about gold. I'll discuss about silver, because silver is doing something really interesting. I have talked about silver lots of times, but this is important. I mean, I've talked about gold lots of times, so it's also important to cover silver. And yeah, so what we can see, this is the chart for Nasdaq. I mean, if you're looking at the long term chart, I'm not going to say that the trend is now reversing, because there is no signs. Even though we have seen some positive moves, but this is not the kind of move at least I am expecting from Nasdaq. Because if Nasdaq goes higher, or whenever it moves higher, it's not going to move up by 100 or 200%. It will move up by 1000 or 2000% in a single trading session. Then we can say that yes, this is the move that I've been waiting for. I mean, 100 200 points is just a peanuts, because we know the kind of companies constitute under Nasdaq, and when those companies start moving, they may move, I mean, phenomenally. Now, as far as the trend is concerned for Nasdaq, the I would say the risk still persists. Okay, so what do we have here right now, or in the next 1 week? What I should focus on is the important levels. So on the downside, please consider these two levels as your very important support level, and try not to go below these two specific levels, because there will be economic and Fed related challenges. So for Nasdaq, try not to go below 10,280 and 10,100 on the downside. And as far as the upper end of the range is concerned, you can clearly see Nasdaq is trading in between a range. So on the upside, you have your resistance at 11,550. Okay, so stay within the range until and unless there is a big move. Okay, now if there is another possibility, if Nasdaq started trading above 11,550 or more, or sustaining above 11,550, uh, 13,000 may open up, but probability is less. Probability is definitely less as of now. Apart from that, let's talk about the Dow Jones. And the Dow Jones is way more stable, what I can say. And what I will specifically look for as far as the Dow Jones is concerned, let me zoom this chart a bit and let us see what's going to happen. So this is what we can see as far as Dow Jones is concerned, and this is going to be a make or break situation because Dow Jones is now trading above 34,292. Okay, so it is important for Dow Jones to sustain above, or to continue to sustain above 34,292 or more. If it does not, then obviously it will retrace back. It will be considered as a false breakout. So avoid this range. When I'm talking about the range, I'm talking about 34,290 and 34,630. Avoid this range. Let Dow Jones settles beyond 34,640 or more, then we can talk about some more upside. Okay, now what lies ahead? If in case Dow Jones moves beyond 34,650 or more, let me show it to you. It has just disappeared. So if it sustains or settles beyond 34,650, or here we are. If it settles beyond 34,650, then the big levels or big targets that we're gonna look at will be 35,800 and 36,950. This is what we're gonna look at as far as the levels are concerned on the upside, but I would be a little bit cautious. I'm not saying that it's not going to move higher. I've talked about Nasdaq. I'm talking about Dow Jones as well. So I would say cautiously optimistic rather than completely optimistic because of n number of scenarios. It's better prevention than cure kind of scenario. Now, talking about the S&P 500, obviously there are indeed some very positive moves that we have seen, but if you are looking at the price chart of S&P 500, it is clearly indicating that the downside is not yet over, and if it does over, then we require those kind of moves. We still require those kind of moves, and those kind of moves are not visible. Those kind of moves are seriously not visible because 10-15 points daily moves are not at all considered as a favorable one. Okay, so there is no point talking about 10-15 point kind of move. And if you're looking at S&P 500, and I have talked about the trend in the past, and there is no change in this particular trend unless S&P 500 started trading and sustaining above let me show it to you, above this level, 4,000, 4,100, 4,050 the least. So what you want to do, keep your stop loss at 3923 on the downside. This is going to be your strict stop loss, and let it settles above 10,000, 4,100. If S&P 500 start trading above 4,100, this is conditional, then we're gonna look at 4,300. Okay, so this is something which we're gonna look at. So for each and every indices, I would say I'm cautiously optimistic rather than simply calling it as a up move, because the kind of move of 0.3 0.5%, this is not the kind of move which we are expecting, and from that we cannot come to a conclusion that the big upside has already been started. Okay, now let's talk about silver. Silver is definitely doing something very big, and this is what we can see as far as silver futures is indeed concerned. And right now, or in the last couple of months, silver has been consolidating in between this very small range, and even the indicators are saying that there is something big which is about to happen. Okay, so what do we have here? So this is the range for silver in the last couple of months. So as you can see, oh, beg your pardon, this is the daily chart. So in the last couple of days, this is what we're gonna see as far as silver is concerned. So what you can do, you may consider 23.2 or $23 on the downside as far as your support or stop loss, and simultaneously on the upside you have 24.8 or $25, which is going to be your resistance. Once it makes its move beyond $25, then we have 30.4, 30.5, which was the high of 2020, and this time there is a high probability that we will move towards the big highs, which is in between, or which will be in between 41 and $50. And thereafter I will definitely talk to you about the big trend. And if you still want, I have multiple videos available on silver, long-term trend of silver. But silver is definitely giving us some very bright indication about the move in the upcoming months or years, or even in the short term as well as in the long term. So don't miss this trend, because if this works out, you have a long way to go as far as silver is concerned. And if it has already started moving higher, then I mean you will see some very big moves. And just try to correlate this kind of dollar collapse will definitely pop up the prices of gold and silver. So that is something which you must look at. And any, I would say, if Fed goes wrong, obviously in the short term or in the medium term, you cannot simply stop the price rise of gold and silver. So that is also something very important to understand as far as the trend is concerned. So I hope you have enjoyed this video, and there are lots of things which you have seen about the trends, about the movements, about what's going to happen. So this is the end of the video. Thanks for watching.